In this video, we're going to talk about how to day trade with a small account, even $100 realistically, okay? Welcome to today's Stocks Trade video where we dive into the practical steps to day trade with a small account, specifically tackling the challenge with as little as $100. I mean, we'll cover the basics, and I've been teaching for years and aiming at maximizing returns while minimizing risks with a small account. Remember, with a small account, especially a $100 account, you gotta really minimize the mistakes because even a $20 mistake is a big deal. So day trading with a small account involves carefully selected trades, focusing on strategies that allow for short-term profits with limited capital. The essence of this approach lies in maximizing trade efficiency through precise risk management and strategic entries and exits points. You got to be very precise. The process begins with selecting a few high potential trades and applying a disciplined approach to entry and exit points, using risk management techniques like stop losses to protect your capital. And it's about making the most out of a small account by focusing on quality over quantity. Okay, listen, let's get right into it. So right off the bat, you got to start small. Limit yourself to just 2 to 3 trades a week when you're trading with a small account, because the odds are, now maybe you're trading with a cash account, but if you are using margin, which you probably kind of need to with this small of account, you're going to be limited by the PDT. Now, a lot of people hear about the pattern day trader rule and they hear 3 trades in a rolling 5-day period and they're like, well, I can never make it work. Listen, if you're focusing on the absolute best trades, most weeks there aren't more than like 3 to 5 perfect setups, okay? So don't be discouraged by the PDT. Now, one thing you're going to struggle with, especially in the beginning, is finding those 3 to 5 perfect setups, but that's what we do every day on the channel. We really help you with isolating the absolute best opportunities, but I don't want you to be intimidated by the PDT. What I want you to do is actually think about it as an advantage, okay? And I'm not saying be a Pollyanna or have unrealistic expectations, but if you're dealing with the pattern day trader rule, which you're going to, think of it as a challenge. Be like, listen, I will not trade this stock unless it checks every single one of the criteria. And a lot of the times, what I like about that is it takes a lot of the decision making and the stress out of your hands, because now you're not trying to catch every move. You fill out your worksheets, which we talk about a lot in the Daily Income Trader system. I'll get into that more later in the video. But if you don't have that box checker, that absolute best setup, then you know what? You just focus on other stuff that day. I'm guessing probably 90% of you have day jobs, okay? You have some work that you have to do. So that's why I think of it as an advantage, because now, no perfect setup, go back to the job, go back to saving your money to build up your account, and only trade the best setups. And the best way to do that is with the worksheets that we have in the Daily Income Trader system. Now, next thing, trade with paper money, okay? Listen, I know again, a lot of people don't like to talk about paper trading because they're like, what, I can't buy anything with paper profits. But, something that I think of is like, I would rather have you make terrible mistakes with fake money, with paper money as we call it, okay? Understand that Stocks to Trade and pretty much every brokerage account or trading platform has what's called paper money. And with paper money, you just type in an amount into the software and you trade with that. So one thing I would tell you is use a realistic number. Okay, I've seen a lot of people that only have a couple $100 and they type $1 million into their paper trading account and they're trading with $1 million. And listen, you can get a little sloppy on your entries and exits by pretending with a big account. Make sure you use a paper money account that's equivalent to the amount of capital that you plan on trading with it. Maybe it's $100, maybe it's $1,000, maybe it's $10,000. Treat it like real money. Force yourself to take the same stop losses, the same profits, and really truly treat it like it's real money. But that's a great way to learn, and something that I tell people is until you can grow a paper account consistently, never risk real money. Now, a lot of people, probably you're typing in the comments right now, you're like, hey, it's not the same. I agree. It is completely not the same as risking real money, but this is my point. If you can't grow a paper account knowing that it's not real money, oh my gosh, are you seriously going to risk your real money? But I see people do it all the time. They're like, I don't want to deal with paper trading, waste my time. And guess what? Almost all of them blow up because they don't want to learn the mechanics. So in summary, and I know I said it a couple minutes ago, think about it. Would you rather blow up an account or take a massive loss with a paper trading account or with your real trading account? I would hope all of you would say paper. Learn to grow a paper account, then go from there. Next thing, my friends, by far the most important thing, always have a stop loss and stick to that stop loss, okay? Like especially with a small account. If you're risking 10 cents a share and now you're down 20 cents a share or 50 cents a share or $1 a share, you will struggle and it will take so long to simply get back to where you are. Like that's where a lot of people, I think this is one of the best ways to control the ego. Like when you're staring at a loss, like let's say it's 20 bucks, okay? And you're at that point and you refuse to take it. And now you're down 30 bucks. Now you're down 50 bucks. And that loss continues to grow. This is what people forget, is it may take you days, weeks, or months just to get back to break even, okay? And that's what people forget. So I would rather stick to that plan, take that small loss, because now, if you take that small loss, well, later that day or the next day, you could easily get back to break even. So don't think, or I do want you to think about the time, okay? Like even if you start trading better, do you want to spend 3, 4 to 6 months to get back to break even? Take the loss, stick to it, have a plan, never deviate on stop losses. Listen, we'll talk a little bit about taking profits, scaling out. You know, you can get a little greedy on the exit side, but when it comes to stop losses, never break it, never violate it. The market will punish poor discipline and the market rewards good discipline. Next thing is monitor your trades very, very closely. You know, and listen, I made all these mistakes. I've been day trading 18 years. I remember back in 2006, I made every single one of these mistakes. Like you can never just walk away, okay? I know I've done it. Like I remember a story I've told back in when I got started, much more of a short seller friendly market. And I was staring at a big loss. I actually was, broke my stop, shorted a stock, big runner. It was pushing to the high a day. I actually tried to close my position. And you might be new to short selling, but if you know how it works, you actually buy to cover, okay? You buy your shares back that you've borrowed from your broker to go to a neutral position. I actually accidentally doubled down on my position on the short side, on the biggest percent gainer of the day. And I literally just shut my computer off and walked away. And I thought I was done. I thought it was all over at that point. I left for a couple hours, came back, stock actually pulled back a little bit, but it was still a huge loss. And it was because I wasn't managing my positions. I didn't want to deal with the fact. And because of that impulsiveness, I actually increased my losses exponentially. Next thing is, let your winners run, okay? A lot of this is, when it comes to maximizing your gains, is when that trend is the trend is your friend, as they say, okay? Like if you're in a winning stock and that thing is trending up in the 5-minute candles, trending above VWAP, trending above the Oracle levels, maybe you've heard of Oracle, our stock trading algorithm, but when that stock is making higher highs and making higher lows, there's no reason to exit. Like I get it. Like I know when you're getting beat up, you're taking a lot of losses, and a lot of times you just see any green. Like again, I've been there. Like you're getting beat up every day, and now all of a sudden you're up like 10 bucks, and you're like, oh, thank God, I finally made some money. And you take the profit, which green is green, but then that stock is in the trend, and now you stare at it and you watch it uptrend all day long. Don't be afraid, especially with a small account. Listen, at the end of the day, if the stock is trending with small position sizes, even if it pulls back, it's not like you're going to be giving back massive amounts of profits. And some of these stocks close very strong, gap up the next day. One of the best ways to turn a $100 account into a $500 account is just let your winners run. So it's so important to really focus on doing that. So my friends, in conclusion, trading with a $100 account is about precision. I mean, it is. And don't be discouraged. Like precision, discipline, risk management. The thing with this is, and I truly, truly believe it, if you can consistently grow a small account by following these rules and being disciplined and being precise, think about when that account's $1,000. Think about when it's $10,000. Like now, you've got all of these very good habits, okay? So now when you're presented with more opportunities or a stock that goes your way or against you, you have that foundation. You have that base of like, you know, putting in the work. Like I think of like, I don't know why this came to mind. I'm like a big fan of the Rocky movies, okay? Like Rocky's putting in all this time working in this dirty, stinky gym, but because he put in all that time when he was broke and couldn't get a title shot, now when he gets the title shot, he's got the discipline, he's got the work ethic, and he's got the, you know, the desire to succeed. So it's a corny analogy, but embrace the drawbacks. I mean, embrace the complications of the pattern day trader rule. Embrace the fact that you have to cut your losses quickly. Embrace the fact that you have to let your winners run. All of these things will reward you in the future. And I know I said it a minute ago, the market rewards good decision making. Maybe not today, but next week, next month, next year, you put in this time, put in this effort, you will get rewarded. So all of these things I'm talking about, you know, I know I talked about candlestick patterns, I talked about risk management, talked about entries and exits, talked about short selling a little bit. If any of these concepts were kind of above your head or you weren't quite clear what exactly they were, there'll be a link below. And what that link takes you to is an hour-long webinar, multiple times a day, 100% live, okay? Like I love YouTube. YouTube is awesome. I don't even watch TV. All I do is watch history videos on YouTube, okay? But there's a limit to what I can teach you in a 10-minute or a 15-minute video. What's awesome about these webinars, live multiple times a day. Like you could check out one at 8 a.m., you could watch another one at noon, okay? Even on weekends. 100% free, live and interactive. Check out that link and we'll see you on the next webinar.